This is Jim from Portage M&A Advisory, and you're listening to the Selling Successfully podcast, the show that simplifies selling your business for those thinking about moving into the next chapter of life. If you like what you hear, please follow or subscribe to find us easily and listen again. We're here when you need us. Welcome, listeners, to the Selling Successfully podcast. Today, we've got an awesome guest with us, Kevin from PE Gate. We're going to learn a little bit more about the options when selling. We're also going to learn a little bit about buyers and what they can expect when working with a fantastic partner. So welcome, Kevin.
Thank you. Thanks, Jim, for having me. Awesome to be here.
Yeah, and I think I'm really excited about speaking with you because, as you know, a lot of people have likely heard, there's a lot of businesses that have to figure out succession. You know, I think there's numbers in the trillions of dollars that need to be transferred. There's gonna be a lot of competition, I think, with sellers trying to eventually get their businesses for sale and figure out how they can get their investment out. And I think what a lot of people don't realize, buyers and sellers, is more complicated than meets the eye. It's not like selling a house. There's more complexity, there's more rigor. Banks are becoming a little bit tighter, and with the geopolitical situation, we're coming out of a pandemic, things are a little bit dicey.
Yeah, absolutely.
And I imagine you've seen, similar things. So maybe as a starting point, can you tell viewers a little bit about PE Gate and your role at PE Gate?
Awesome. Yeah, absolutely. So PGate was founded by our GP 7 years ago now with the mandate to bring private equity investments to lower middle market and have individual investors get access to investment in small business. The idea was, he'd worked in private equity, a large fund for a long time, and he saw typical investments were in the millions of dollars from the individual investor's perspective. And there was nobody serving the lower middle market with kind of a sophisticated purchase process. And the fit that we came up with, the product market fit, was basically bringing in high net worth investors, bringing in sellers of businesses, owners of businesses that wanted to exit to good people that were going to keep their business, operate it, run it without necessarily a sense of an exit. And then build a platform that would allow those investors that came in with a more affordable check size to actually have a liquidity event if they required it. So typically in private equity, you're cutting a large check, you're sitting on it for 5 to 7 years, and you're hoping that the fund, when it exits the portfolio, gives you a sizable return. You're also paying fees for the privilege. With us, there's no such fees. We don't. It's just a management. There's no management fee. There's only the upside and the incentive on the carry. And then we're going after lower middle market deals that are anywhere from 3 to 7 million of enterprise value, up to 10 nowadays. And we're bringing that access to those investors that want to be able to come in, support lower middle market businesses, small Canadian businesses, and then take advantage of the proceeds over time.
Right. And I'm very interested in this topic, obviously, because there's so many businesses that fall into this category. I also find too that it's a difficult place in which to operate and navigate a transaction, right? There's limited information, there's ambiguity, sometimes there's a lot of risk only because of the dependence on the owner. Now, you guys have a slightly different model. You guys also will identify an operator who's familiar with the industry. And that's the piece that I think makes so much sense. Because if you can think about it, if you're a manufacturer, specialized manufacturer, and you got a financial buyer coming to the table with no experience but capital, and there's a VTB or there's contingencies, there's a lot of risk for them. And we struggle at Portage to close deals like that because we want to make sure both sides feel comfortable. But you guys are identifying an operator. So how do you find these operators, and can you talk a little bit more about that model?
Absolutely. So myself personally, I'm an operating partner at the company. So I would qualify as the operator which you speak of. I was attracted to PGate when I launched my own search for a business to buy. I have 25 years work experience across different channels and territories, mostly around growth and sales leadership. And when I determined that I wanted to go and buy a business, I didn't have M&A experience. I didn't have transaction experience. So sought out investors that could help on that side. And Pgate was one of the first few organizations that I connected with, where they fill the gap really, really well because they have the expertise and the leadership on leading transactions to close. They do QV internally. They have a lot of templated agreements as well that saves operators like myself a ton of money and time. Most importantly, what they offered was the ability for us to work together in partnership on a portfolio where I had a natural fit and I had the experience and the background to operate. And I could go in, operate the business as a CEO and president, and then eventually I could pull back out, get to board level, and continue to add value to the portfolio that way.
Right.
So from my experience, having kind of delved in this side of the market for the last 3 years, I've seen a lot of independent searchers, they call them self-funded searchers, or even independent sponsors that want to get into this but don't necessarily know how to go about finding a business, closing a business, which I find to be one of the bigger complexities, and then operating but with support, not on your own entirely. And that's where Pgate's team and experience really kicks in, because they want to be actively involved. They're really great at like governance, and Pgate takes a very active board role, and potentially even at the portfolio level on kind of marketing and sales and finance and governance. So it's highly attractive as well for a business owner to understand that there's an entire system behind the operator. Right. It's not just, you're not dealing with one person who you're entrusting with the VTB, the earnout that's going to make it work and get the seller paid. You're entrusting an entire organization with different expertise in different fields.
Right. Yeah. And if we take that seller's perspective again, if I'm selling my manufacturing company and I'm getting good advice, it should be, listen, we've got to find a buyer who has the ability to close. I mean, that is one thing we're always looking for in the quality of buyers. Do they have M&A people around them, not just a generic accountant or lawyer? We want to know that they understand how the process works, how bank financing plugs into it, and how transition works. I think that's the other key piece, right? Because at the end of the day, we don't want to waste our sellers' time taking their foot off the gas, navigating some potential, transaction when it doesn't go through. It's super painful. Yeah. From your perspective, what have you seen, some of the challenges be? I mean, obviously, if you're a seller, you're selling your manufacturing company, what are some of the pitfalls that you often see with buyers? So
from a manufacturing perspective, I think a lot of buyers will assume that how a business has operated thus far can simply continue. And you as an operator have to simply come in and understand the P&L and the finances and be able to continue the manufacturing as it has operated. And unfortunately, with what you were referring to earlier, the kind of macroeconomic changes happening, social, societal changes, and everything happening around, businesses are having to pivot. I mean, AI has been incredibly disruptive in the last few years, and it's only going to get even better in terms of how much value it can bring to different businesses. How do you manage all of the competitive landscape changing, as well as the legacy of success that the business has had? How do you amalgamate the two? And that's where you need to have a team behind you. You need to have an ability to, understand, absorb different inputs from different places, and be able, experience maybe in strictly in manufacturing has been helpful to run a manufacturing business today, but in the future, maybe you can draw on experience in professional services, in managed services, maybe in retail in certain cases, and you can bring that knowledge base together to kind of help the company evolve the manufacturing plant, whether it's implementing new systems and new processes that have worked elsewhere. Implementing an EOS, for example, tends to be popular and very effective at helping a company transform and adapt itself to new environments. And then you have your leadership transition, everything to do with how do you maintain the team that was there, that got the company to where it is today, and is that team the team that's going to get you to where you need to go? Right. And how do you do the change leadership and all that? There's a lot, but as you said, it's very, very important to be aligned, I think, with the seller. And with Pgate, I find we're very, very good at finding that commonality early in the process before even entertaining any kind of transaction, because we want to make sure we're dealing with good people that care about their business, that care about their legacy, Not saying they don't care about maximizing the return on the investment in the sale, but actually are genuinely caring of what happens after the close of the deal.
Right.
And that's where our kind of flexibility in terms of, how much we invest, what percentage, does the seller want to have a role? We have a business that we recently closed in professional services where the seller wants to do BD work, and he just wants to, be able to keep fielding phone calls, but just doesn't want to do anything else. And we're like,
Right.
we'd love that because he has an incredible reputation. It's his name on the wall. He's been in his industry for over 30 years, and we feel like he can add tremendous value, and he's going to be motivated because originally when we met, he's like, I want to retire, go sail into the sunset. 6 months of having to deal with exiting with his wife by his side, closely tied together. And he's like, maybe I'm not ready for retirement just yet.
Right.
So we're happy to provide that flexibility. And yeah.
And those are some really great points. I mean, one of the things that really stands out to me is if you think about the seller, whether they like it or not, when they're selling to someone who needs to succeed in order for them to get full value, right? There's a VTB that oftentimes, or a promissory note that will trail the closing by 5 years, up to 5 years. Some hopefully less, but sometimes it's 5 to 7 years. And if the success of the buyer doesn't materialize, well, guess what? They may not get full value at the end of the day. The other piece that you mentioned, I think is really important, is the transition. And what we've seen in the last few years is that more and more business owners want to get out. In their head, I'm done. I've got the Friday blues. I'm done dealing with employees in the day-to-day. However, when they take a step back and maybe take a month off, they realize they're passionate about the business. They're passionate about helping. They care about the employees, the customers, and suppliers. Sometimes a more effective runway for them is to bring a partner in who can take away the stresses of the day-to-day, and they can focus on some of the pieces that they really love doing. And it adds a ton of value to you as the buyer, and it gives them the opportunity to stay plugged in and provide some value. And you mentioned that. Can you speak a little bit more about what you typically see?
Absolutely. So another interesting and unique proposition for P-Gate is minority ownership. So in some cases, there's been owners that have wanted to continue, but wanted to do it with a partner, like you said, somebody that comes in and kind of helps them with the typically they don't want to deal with the administration. They don't want to deal with the business management. They want to deal with like the people and the clients and servicing them. Or if they're, the engineers or the production types, they want to focus on the product, not the business. We'll happily accommodate that, and traditionally what will happen is it'll be a business that has, because of the fact that they're not as passionate about managing the business, there'll be some weak points in the company, whether it's customer concentration, whether it's not the strongest balance sheet, however the business has been currently running hasn't been optimal.
Right.
What we'll do is we'll come in and we'll identify those kind of potential weak points, and we'll say, listen, we're not just going to tell you what you need to do as an advisor. We'll actually put skin in the game. We'll invest. We'll take a minority position. You maintain control, and let's partner together towards an eventual exit. And the exit could be either to our existing investor base through our platform, which again is one of the key benefits of working with P-Gate, or we just go back to Portage and we say, listen, we're a bigger business. We're much more robust. We think we can attract a much higher valuation by going public, so let's do that.
Right. That's fantastic. So I mean, if I'm a seller, you guys have a lot that you can provide behind the scenes, not only just the operator. And I think that's a huge benefit. I think too, just navigating the difficulty and the challenges of raising capital, bank financing, that's become more challenging too. You mentioned QOV. Are you seeing more difficulty getting bank loans and financing for these transactions?
Yeah, it's funny. We've experienced this recently. Banks that are very, very adamant about how they're able to support and happy to support, and they'll give you all the terms and discussion papers, like, look, push it out easily. And then when it comes time to closing, they just make life very difficult. So there's a couple of things that are important. First of all, you need to have a brand name. You need to have a reputation in the market when you're dealing with the banks. They need to know you. They need to be familiar with your process and your systems and the way you diligence, whether you're really good at that or whether you're outsourcing everything matters, because they want to know that you know what you're doing,
Right.
and that you have experience having done that before. Secondly, they want to know that you can raise the required equity and that you're very strong at the scrutiny of what kind of businesses you want to pursue. You're not just going after any random deal just because it's available and it's out there. So with P-Gate, we have some very strong banking relationships that we leverage more often than not. We go to the usual partners, but we do find it, especially these days, harder and harder to find very, very competitive terms, because ultimately the market is such today that businesses traditionally that have been overly leveraged are struggling, and banks are reticent to give you too much credit on a deal, especially if it's our preference is for cash flowing deals that are ideally not very capital intensive. And banks prefer that you have these big, expensive assets that they can leverage if need be. So ultimately, you have to be prepared. You have to be ready to answer all of their difficult questions, and you have to have a very strong plan for what you're going to do with the business once you've taken over. I think that's another oversight that a lot of buyers will have. They'll typically say, kind of similar to what you'll hear in startups, if I can only grow the business 2 to 3%, it's good. Yeah, but it's a nominal 2 to 3%, but how are you going to achieve that? You know what I mean? Like, well, what's your game plan? What's your strategy? How are you going to, and typically you buy a business, there's going to be expenses, the EBITDA is going to suffer, your cash flow as a result is going to suffer. Now you got to worry about your debt service and whether that's going to be okay. You need to be able to plan for that. And if you don't have a very strong game plan and again, a track record of success, it becomes a bit of a big ask for the banks to believe you and trust you with their money.
And if you think about it, oftentimes the bank is carrying most of the risk, right? They're funding 50 to 60% of the deals, sometimes more, maybe sometimes less. I look at this as a three-legged stool. And the banks remind me of this analogy all the time. There needs to be shared risk between the bank, the buyer, and the seller. We typically see a promissory note or VTB of 20% or maybe rolled equity of 20%. The buyer's got to put some skin in the game, and then the bank is holding the majority of the risk. And I think it's completely reasonable that the bank is going to pressure test, the buyer scenarios of success and whether or not the transition holds water. They got to make sure that there's a good fit, there's familiarity, I think, in the industry. Because what we've seen too, just, with some of our clients, their ability to navigate some of the challenges in the last 5 years have been absolutely significant. You need good balance sheets, you need good operators, you need good KPIs, and you need a finger on the pulse. When there's an announcement, across border about tariff implications, what are you going to do? If you don't react and you put your head in the sand, you may be out of business, right? Like, this is the reality we're living in.
Absolutely. I think every business that's still alive now has proven itself to be very resilient. And that resilience counts for a lot, especially with the banks. Typically, the businesses we look at don't have any long-term debt. So you're going to the bank and saying, trust me, the business can handle it. Right. And you have to have that game plan. You have to have a plan in place. That's where I think having the operator still involved, like you said, either with a long-term VTB or some kind of rolled equity or a minority stake or a majority stake as well, if in cases where he wants to take a second bite at the apple down the line, or he or she. I think those are very, very important, and the bank loves to see that. The banks love to see that. From our perspective, we just want to partner with good business owners that are high integrity, that are as open and candid about their desires up front. We like to seek alignment quickly, and who are able to basically convince someone, again, like Portage or some form of advisor, that they're really ready for the transaction. Because we do see a lot of people that kind of express interest. They come in, they walk the walk, and then when it comes down to like, okay, well, now you got to sell the business and you're gonna retire, or you're gonna take a different role moving forward, they realize they're not necessarily ready for that.
Right. Yeah, there's a lot that comes into play when you really take the next step and you put ink to paper, so to speak. I think the idea of selling is fascinating, and it's a necessarily thought process that needs to happen. But I think moving from the idea to the process of actually getting it transacted is very different. Yeah. And I think some sellers just need some time to really educate themselves on what's involved in the process. And I think too, they need to think about where they want to fit into the equation, especially if there's family members, other parties involved. I mean, we've been seeing more management buyouts where they may have a GM,
Yeah.
and there have been promises to the GM, and they're having conversations with you, but maybe that doesn't come up.
Correct.
Right? And now they're trying to figure out, how do I navigate this? I made promises on two sides. What do we do? This sort of thing.
Hence the importance of being candid. Like, just be upfront about what you're looking for. Be upfront with what what motivates you, what's motivated you to come to the table for a transaction, and we'll be very honest and transparent about what we can offer in terms of value. And we've seen a lot of success being straightforward, honestly, because there's a lot of noise out there. There's a lot of people that will talk about what they can do and what they think they can do and all that, but unfortunately, they either don't have the track record, or they're, the types of buyers that'll be, looking at financial restructuring and optimizing processes, and not necessarily like, how do you grow this thing? How do you make it something bigger than it was when you found it?
Right. Yeah, I think it's very different when you get in there and you're trying to manage the culture and you're trying to understand how the business actually runs, versus thinking from behind the desk saying, I'm going to optimize this because I have this skill set. I mean, rubber needs to meet road at some point in time, and having people behind you who can help guide the process is huge. Yeah. I'd like to pivot now to buyers and how you guys have really started appealing to high net worth individuals, corporate investors who may have money. They are looking for ways in supporting small businesses. They probably understand that there's a lot of business owners looking to exit. They may not want to run these things, but they may want to invest. Can you talk a little bit about the opportunities through PE Gate and what that looks like?
Absolutely. Yeah. So as I mentioned earlier, effectively, PE Gate allows investors to come in with smaller checks into private equity. So typical investment can be as little as $100,000. And again, because of so we're registered as EMDs within the province of Ontario with the Ontario Securities Commission. And ultimately what this allows us to do is to market deals to the public. Now, where this is important is the secondary transaction. So if you're an investor that wants to come in on a deal because you really like it, you get to choose the deal. You're not investing in a fund where you put in a certain amount of money, and then basically the fund has the autonomy to invest in deals that they like, that's part of their thesis, which may or may not align with your personal preferences for the types of businesses or your exit horizon or your return desires. So with this situation, you get to invest in whichever deal you like. You get to cut a reasonable check. And whenever you're ready for an exit, or potentially to double down because you love where the company's going and you feel like there's an opportunity for you to, sink more capital because you believe in this, we have that platform that on an anonymous basis, you get to either put shares for sale or put a price down to buy shares from a willing seller. So the whole process is kept confidential. We're not marketing to market, so it's a transaction between the buyer and the seller. What we're doing is we're providing, obviously, the financials to a certain extent, like enough for you to make a fair decision on valuation. And then effectively the seller is able to, sell the shares and liquidate their proceeds and avail themselves of the lifetime capital gains exemption, because it's a shareholder structure which was specifically designed to support the platform. So compared to with traditional private equity where it's a GPLP and it's taxed completely differently. So we feel that that's a very, very appealing from a financial return perspective. And then, as you mentioned, from an investor that wants exposure and that wants to support small business in Canada, this is by far, from what we've seen, one of the better options out there, because you're getting access to businesses that you like, you're getting insights into how the business is operating, you're getting quarterly reports sent to you, and then you can raise your hand and say, I think I have a way that I could provide value to this portfolio, and there is a means by which you can have an impact directly into the company. So because you're an investor, because you're connected through PGate, there's absolutely room for people to come in with help, with support, and there's incentives are all aligned across the investor base.
Right. So I could be a plumber, electrician, dentist, doctor, I don't want to get involved, but I want to put some of my money to work. I may have a wealth advisor, I've got some funds in the market, but I may want to invest in a business that, let's say, diversifies me. Or you're saying I can come in, I can talk to you, I can see a couple of the businesses that you guys own are going to purchase and say, I want to be a part of this. I get to understand who the operator is. I can add additional value if I want to sit on the board, and I can add value. And you're saying I also have the ability to liquidate my investment down the road if I find that, you know what, my daughter's going to university, I need some funds, I'm going to pull it out.
Yeah.
So you're saying there's that much flexibility at the end of the day.
Absolutely. Yeah. And as a corporate investor, there are some significant tax efficiencies for you to invest from your own holdco. So happy to kind of address that in one-on-ones with anybody that expresses interest to reach out. But ultimately, the idea is if you're a big enough investor in any of the actual companies, that you're considered an affiliate, which gives you significant tax advantages. So there is a way for you to deploy capital that's not personal. It could be also corporate.
Right.
And that's, again, part of our offering that we find is unique to us so far.
Oh, that's cool. With respect to the returns, are there dividends paid? There's obviously some appreciation, I imagine, if the business does better. What have you seen across the portfolio? You know, if I'm earning 6, 7, 8 in the market, is it going to be comparable? Is it going to be different?
Yeah, so I'm not a finance guy, but the first thing I was informed when I joined was the line of historical performance will not reflect future. So I have to be careful with what I say, and I'm a growth person by trade, so I'm always eternal optimist. I would say so far what we do is we target a 25% IRR. That's really what we're targeting. That being said, because we're not mandated to sell or to exit, and the businesses are all cash flowing, we're very much cash flow and dividend focused. So we're all about distributions. Depending on the size of the deal, depending on how much leverage there is as well, and how much of the debt we have to pay back the bank, the distributions may be either very quick or maybe a little delayed till after some of the debt's been paid off. But so far, so good in terms of all of our portfolios. They're all they're all profitable. They're all issuing dividends for the most part, and we've had some exits with significant returns on invested capital that we promote on our website. So I'd say if you're looking for more than 8%, this is definitely the place to look in private equity.
And I find too, folks who have sold their business oftentimes have this idea of buying real estate or buying another business, but when they look long and hard, they're like, the acquisition piece is going to be expensive and very onerous. The other piece is, do I want to give up all my time? I now have more freedom. This gives them an opportunity to smell, feel, understand the business, so to speak, without the difficulty of going into the office and managing employees and this sort of thing.
Yeah, it's a great point, actually. I mean, if you're looking to diversify your holdings, obviously you're familiar with real estate. You're probably, you own some properties, you own some real estate. Market today, the way it is, maybe it's not the best time to sell, but you can potentially acquire some more holdings. However, if you're looking at anything in the public markets, a single Twitter tweet could change the entire landscape of all your holdings. So there's a lot of volatility that you may not want additional exposure to. Investing in small businesses that have been in business 20, 30 years, that have successfully been operated, where it's being managed by a professional team of accountants and successful business owners and successful people from different walks of life that have value to offer to that portfolio. It gives you that security and that certainty that this is being managed professionally. Plus, I do have access to liquidity if I want to free up my capital for something else. I'm not stuck for those 5 to 7 years that traditional private equity has stuck to as a model. And so that gives you we like to think you have a little bit of the best of all worlds.
Right. Fantastic. I really appreciate you touching on these things, Kevin. I think we touched some really interesting topics, from the seller's perspective, what they should be looking for before they lock horns with the buyer, how difficult it's actually gotten out there, to ensure they get to the finish line. I think they need to be prudent. I think they have more options out there than they realize, but if they take the right steps, they can be very successful. And then obviously on the buyer side, there's options for people even after they sell, either to continue on operating or assisting, whatever level they want. They can invest in other opportunities. I mean, you guys certainly provide a lot to everyone, it seems.
We try, and I would say to echo kind of the sentiment, I think brokerages are incredibly critical to the ecosystem. Advisory firms like Portage, especially you guys in the lower middle market, are instrumental in getting the seller ready for an exit and partnering up with the right buyers. I think that there's a lot of buyers out there. There's a lot of people that claim to be buyers that aren't. We've seen a lot. I've personally seen a lot of people as well talk about what they want to do, but aren't necessarily committed to that. And having an intermediary being able to manage both sides of the equation towards a successful transaction is critical. So really appreciate the value you guys bring to the ecosystem. And I think everybody who's looking to sell would be well served to talk to you before they go to market.
I appreciate that. I mean, I think we have a shared passion for helping businesses in the lower middle market. I think we also understand that a lot of people do need good, solid advice and assistance. And it's been certainly a pleasure partnering with you guys and trying to piece pieces together that make sense. Well, thanks again, Kevin.
Thank you. Thanks a lot.
Please remember to like or subscribe to keep this podcast handy, and we'll see you next time.